Hey guys, welcome back. Thank you for tuning in again. And this particular episode is going to be a wonderful one because it's going to help a lot of traders who have a lot of excuses of why they cannot keep up with trading. Okay, so this particular episode is for traders, let's say part-time traders who are busy with school or you have a job and some other stuff like this. This is a swing trading strategy and it's one of my best because it has a very high win rate. The only thing that's stopping you from having a good win rate in this strategy is your fear. If you fear of taking the trade or if you fear of closing out too early, that's the only thing that is going to stop you from having a good win rate with this particular strategy. Okay, so I'm going to be talking about this strategy and I want it to be a very short video, so watch to the end. Okay, so this is Nasdaq, and to be clear, this strategy works on any um any pair. Doesn't need to be Nasdaq only. You can use it on your currency pairs or even crypto. This strategy works very well. Okay, so let's say you have a daily fair value gap. You have your market trend. If the trend is bullish or if the trend is bearish. I taught you how to figure that out with daily bias video, something like that. Okay, or ICT multi-time frame analysis. If you not watch that video, you can go back to that video and watch it now. I taught you how to find the trend using premium and discounts with your Fibonacci tool. Okay, so this is a bullish trend on Nasdaq. Now you find your bullish trend with your weekly time frame or your monthly time frame, right? But you come to the daily time frame and look for what you look for: fair value gaps. These fair value gaps can be easily seen. Doesn't matter if you're using your phone to trade or if you're using your system or if you're using a 5 or 50 inches monitor or whatever, you always see this particular strategy play out. What you want to find first is a daily fair value gap. You see, we broke this high and just like saying the higher high, higher low and stuff like that. But this one is different because this one is pure narrative. Okay, so we have a fair value gap, and you know that this fair value gap is a point of rejection. Even though it's multiple, we still have another fair value gap here. Yes, but this particular fair value gap is a point of rejection. You should respect that. Price will respect it, and sometimes, in many cases, come back to this other fair value gap. But what do you want to do? Does that mean you're going to sit down and watch how price leaves and you miss a lot of trades, a lot of pips, a lot of profit? No. What, if you may ask, is the best strategy to pick trades at this point, right? So this particular strategy gives me about 12 risk to reward ratio. The only thing is being able, I'm an intraday trader, yeah, but when I see this particular setups, because it doesn't happen every time, sometimes it can come once in 2 weeks. You get, sometimes it comes twice in 2 weeks. You just want to figure out that particular strategy, that particular place. You wait. That's why I say it's perfect for those who are schooling or those who have their jobs. You can just pick this strategy and pick this particular trade and go about doing whatever you want to do. You close when it gets to your target, or you take partials along the way. Okay, so without much further ado, let's get into it. Okay, first I want you to pay attention to the price action inside this favor candle. Because if we have the first candle dropping into the respecting the consequent encroachment of that favor gap, we have the second candle, the third candle, fourth, fifth, sixth, and the seventh. 7 candles inside the favor gap, but there is still something that will give you a good entry there. Now, what is it? Let's look at that. Okay, so zoom in. This is 1 hour time frame inside the favor gap. This is 1 hour time frame, and this strategy, you must understand that it works in a new week. Okay, so even if you see this strategy and let's say you are the current day is Thursday or Friday, right? What you need to do is wait till the coming week. What price does in the coming week is trade into that fair value gap and give this particular pattern. This strategy has nothing to do with the time of the day or the time of the week or the time of the month. When you just see this, you take it, right? So we have Thursday's price action here of the previous week. We also have Friday's price action of the previous week. Remember, we're not paying attention to this Thursday and Friday. Although Thursday and Friday dropped into that fair value gap, remember, we're not paying attention to this. We want a new week to open. And when does the new week open? Sunday, 6 p.m. This has nothing to do with Monday, 12 o'clock New York time, right? This is Sunday when the new week opens, when candle starts printing. These are That particular gap that creates the new week opening gap. That's where you want to check, you want to mark your line for this particular strategy, right? First, you want to see if price leaves a daily fair value gap. And the next thing you want to see is if price trades into that fair value gap. So when price trades into that fair value gap, that is using 1 hour time frame. Remember how it broke down from the daily time frame to the 1 hour time frame, right? So when getting to the 1 hour time frame, what you want to look for is a new sweep of a low inside that fair value gap. You can see that price swept Thursday low here on Friday, but this is not a new week, so we are not going to be using that. We want to wait for a new week. Now, when the new week opens, Monday sweeps that Friday low, that last low that was dropped on Friday. You can see that Monday sweeps that. Now this is where the attention should be woke. This is where you start looking for. What you want to do is set your alerts to this high, right? Price sweeps a low, you need it to break that high, right? What you do is set your alerts at this high. Once price broke that high, then you can come back to your charts. Remember, you're not charting every day, you're not charting every week, you're working with just um narrative and your alert. Okay, you said when once a new week open, you set your alert on this low and you set your alert on the new high created. You want price to sweep that low. Some people take their trades here, but this is not ideal. You want to wait for that price coming into the breaker. This can also be called an advanced breaker theory, according to ICT. Advanced breaker theory. You'll see this, trust me, on every single chart. Just do me a favor and go and study this particular strategy. So what you want to do on the 1 hour time frame is to find the last up close candle before price swept that low. Now, where is the last up close candle? You can see this is the last up close candle. Draw that out to the right. You can see how price trades back into that, respecting it. All the bodies of that candle always, I mean, always respect it. If you trade US 30, if you trade um US 500, US 100, anything, find this strategy, write it down in your journal. You don't have to worry about keeping up with exams or school and everything. Just find this particular strategy and pick your trade. Less is more. Understand that, okay? So once price takes out, remember this strategy does not have anything to do with intraday. This is a swing trade. Okay, so once price takes out that high, you can see my bulb there on that high. I want price to break that high with candle bodies, not just a wick. Remember, candle bodies. So once price break that high, we draw our breaker there and you can see that blue tick. I'm buying there. Follow your risk management pattern but buy there. You can take partials at the first high or close all your profit at the first high. Either way, price retraced back but still went back up again to tell you that this particular place is still holding. This is a very good strategy. If I want to pick this trade, I'm picking my entries at the bottom. I'm not going to pick at the top because some of you like doing that. It gives you less risk to reward ratio. Where will your stop loss be in this kind of trade? Your stop loss will be at the first low. This is the low here. That's where your stop loss. So if your stop loss is here and your entry is here, you can see that's a very big amount to risk. Meanwhile, my stop loss is at this low and my entry is at this bottom. Take profit at this high. That's a very good amount of risk to reward ratio. Trust me, guys, this thing works almost every month. You see it twice in 2 weeks or once in 2 weeks. You always see it. That way you don't have to worry about trading every time. You're a swing trader, so you just need to wait for your particular strategy or your setup. Okay, so let's look at another example. All right, that was the previous fair value gap to show you that this strategy is something that works every time. I'm this kind of person that I don't like teaching with bar replay. There are a lot of things bar replay does. It has a lot of cons, even though it has pros too for backtesting. But trust me, it has a lot of cons. If I use bar replay and be teaching you, some of you feel like I've already seen what price was going to do, so there's no need. Some things like that. That's how I used to feel sometimes when people teach me with bar replay. I think I learned very best when I learned from ICT, because it doesn't teach you bar replay. It's showing you how to read the price itself, not showing you how to clean your chart and play it for some fancy show off. not this kind of stuff. So I don't teach with bar replay, okay? And I teach according to the episodes. This is a course, so you just follow these episodes one by one. Don't start from this particular video. You gotta start from episode one. Trust me, it will help you. All right, so let's get back to the video. Well, we have another favor gap here. Remember how to draw a favor gap from this low to this high. If you don't know how to draw a favor gap, or you don't know what favor gap means, find the video on this channel that explains favor gap and weak zones. Find that particular video and learn what favor gap is all about. Okay, so now we have first candle, second, third, fourth, fifth, and sixth trading inside that Beverly Gap. But what do you see? You can see that after price drops into this Beverly Gap, the rest of the candles are leaving. And you can see how the bodies of the candles are respecting that Beverly Gap. So you can see that daily Beverly Gaps are a point of rejection. They are point of rejection. One thing you need to find out is your direction. If you don't understand your direction or your market trend, go and watch that particular video, ICT multi-time frame analysis. If you understand that, then you can come to this. Once price trades into that daily Beverly Gap, your attention should be awoken there. That's where you want to start looking for your strategy, right? For those swing traders, if you have time to trade intraday, like everything I teach, the daily MD, the weekly MD, fine. But for this, if you don't have a lot of time, then this is the best strategy for you. Okay, so inside that Beverly Gap, we break down to the 1 hour time frame. Remember, as a swing trader, you have absolutely nothing to do with the 5 minute time frame, 15 minute, 1 minute time frame. Your attention should stop here at the 1 minute time, the 1 hour time frame. Sorry, you find the daily favor gap on the daily time frame, and you come down to the 1 hour time frame. Now look at this. So in a new week, you can see price already traded into that favor gap in the previous week. This was Wednesday, then Thursday, and Friday. You can see Thursday swept Wednesday's low. Thursday swept Wednesday's low, but that's not where attention is. If you even see that, you can see that this is the breaker of that movement, but price have not broken that yet. Okay, so what you want to look for is in a new week. What I mean in a new week is in a new week, like Monday, when Monday opens, but your vertical line should be drawn on Sunday 6 p.m. You want to see the price action from the starting. Price sweeps this low early Monday morning. That's the London session. Price sweeps that low, then creates that high, but still comes back to sweep that low. I hope you're getting the point here. Once, if price broke this high, this would have been a breaker. You can see that if price had broke this high with candle bodies, of course, this would have been a breaker. So if you take this high, this wicks, as a break and draw that as your breaker, you can see you would have been stopped out again. But you want to wait for the last up close candle before the sweep of that low and price breaking that high. So what happens? Just at the heart of New York session, price drops that up close candle. Remember, 1 hour time frame, not 15 minutes, not 5 minutes, not 1 minute, not anything. 1 hour time frame. After you find out your daily fair value gap on the daily time frame, you come to the 1 hour time frame and look for this particular thing. So there is a breaker. You can see that's an advanced breaker. Price swept the low and broke that high inside that fair value gap. And where are we buying from? You can see that button is where we are buying from. Sorry, that color is red. I'm supposed to put it to be. I'm supposed to make it blue, but that's where you're buying from. That's where your trade should be. Entries at the bottom of the breaker, you can see there. Stop loss at the last low or the first low, because sometimes there can be multiple lows or there can be inefficiency. You just need to place your stop loss in an invalidated zone that you know price will not come to. And the sweetest thing about this thing is that price does not close below this breaker, no matter what it does. I don't know, I've not really studied it very well with currency pairs, but trust me, if you are trading Nasdaq with me or US 500 or whatever, price does not close below that breaker. Don't take my word for it. Go and study these things by yourself. Once price broke that high, you can see price broke that high with candle bodies and also consolidation, then traded into that breaker. If you are an intraday trader, you know what that means. That means that on the lower time frame, there's a fair value gap there or a previous day low. What does price does when price opened on Tuesday, it came for Monday's fair value gap or Monday's low. That's the daily AMD. So it's just like the same thing. You get it's like almost the same thing. But if you want to maximize your profit and hold it for long term, this is the particular strategy you should use. My entry there, my stop loss here, then take profit. First partials at the high, remember, and you can always, you know, hold your trades till whenever. You can take your first partials here at this high. You can see that retracement into this fair value gap, which is also known as what the intraday AMD. I thought about this too, intraday AMD. You can also pick another trade to continue, or you can close some trades here, half of your profit, or you can let it continue going till the end of that week or the end of the next coming week. Anyhow you want to hold your trades, this is up to you, but this is how you pick this trade, and this is the most important aspect. You don't want to be closing this trade when you see small or little retracements. No, you don't want to do that. This is swing trade, so you don't have to worry about closing trades when there are little retracements. Let's look at an example. I'm showing you multiple example. Okay, this is that same trade. You can see price swept the low, price broke this high, price trades into that advanced breaker theory. And if you are taking partials here, you can see price still did times two of that. You take your entries here, and all of this is profit. All of this, you take partials here and still hold that trade till wherever. You can see that that's some massive profit. This was, I think, about on Nasdaq 600 pips from here, from there to there, 600 pips. The thing about this thing is that you don't need to go on showing off your trades and stuff. So, oh, I took these, but when you lost, you hide them. No, work on yourself, build in silence, focus and master this particular strategy if you want to be a swing trader. And trust me, you finally get it. Okay, so let's see another example. I like giving multiple examples. I'm not this kind of mentor or tutor that tells you about something and gives you only just one example, because trust me, there are many things in the chart that happens once in a time, just like it can happen once in 6 months, or once in a year. There are many things in the chart that happens like that, and those kind of things people just make them to create content. That's the thing. I don't do that. I give you multiple examples to see that, to show you that this thing actually works. Go to your chart and see them. You see the first example, you see the second example, the third example, the fourth, the fifth, and so on and so forth. You go and study these things. The goal is to find what repeats. That's how you make it in trading. You need to find what to repeat, not what works once in a year, not what works once in 6 months. You need to find something that repeats every time. That's why I'm showing you these different examples. So bear with me, okay? So we have another fair value gap here. The high of the first candle and the low of the second candle. Daily candle, this daily time frame, sorry. When price, our market trend is bullish very well on Nasdaq, right? Till at least we take out that high on the weekly time frame. You can go to your chart and find that. All right. So once price drops into this fair value gap, what are we going to do from here? We go to the 1 hour time frame and look for entries. Okay, in a new week, not the week that has already gone far. Not, let's say, Monday, right? Monday, Tuesday, Wednesday, Thursday, Friday. Okay, this week did not start from the fair value gap, so you want a new week that's entering into the fair value gap newly. That's what you want to do, just like other examples I've shown, right? And you go to your 1 hour time frame, this is the 1 hour time frame, and look for that particular trade. Okay, so I'm going to do a little bit assignment. So you bear with me, just a little bit assignment. Okay, this is the opening of the new week. You can see that this is the opening of the new week, and this was where Friday ended. Monday started there, and sorry, Sunday started there, then Monday opened, price drops into that fair value gap, sweeping this low, then trading back up again, and all of this. So what I want you to do is pause the video. Please just do this for me. This is how you learn. I want this particular course to be as interactive more than anything out there. This is how you learn. It's a course, right? So pause this video and show me exactly where your advanced breaker theory is. Don't do expo. Pause the video, take a screenshot, and outline it for me. Then you can send a screenshot at the on the comment of this video, or you can send a screenshot on the Telegram community where the mentorship is going on. Just do that for me, okay? Pause the video, find out the advanced breaker, and put it on the comments or on Telegram. Okay, so let's get back to the video. Right, so I've given you enough time to find out the breaker. If you got it right, congratulations, you're a fast learner. Okay, but let's look at it now. This is what price does. Monday trades into that fair value gap. You can see that fair value gap, this first horizontal line and this other horizontal line. This horizontal line is the sell side liquidity of the previous week. Price swept that. At this point, Monday you have no trade. For if there is swing trade on Monday, you have nothing to trade there. Tuesday, you have nothing to trade. All you are patiently waiting for is price to break this high. Price finally breaks that high on what? On Wednesday. What do? You're waiting for price to come back to that breaker. Now you can still pick your entry here at the top of this breaker, but I wouldn't advise that. You can still pick your entry at the middle, but I like picking my entries at the bottom. So once I see that price coming down to the bottom, that's my entries. And if you may ask, because I said place your stop loss in the nearest low, there are no near low here apart from this. Okay, no low is near here. There's fair value gap, and of course I said don't buy above a fair value gap, but for this particular strategy, trust me, price is not coming down below this breaker. Just trust me and study it very hard. Price is not coming down below this breaker, so your stop loss can be at the bottom of at the beginning of that efficiency. Let me show you. So this is how your trade will be like if you are picking this trade. At the bottom there, your entry, your stop loss at the beginning of that efficiency. All of these zones you can see down are totally efficient, but here is inefficient. So sometimes price will strike a wick to refill that, like a candle wick to refill all of that. Sometimes it doesn't. So your stop loss should just be where the zones are efficient or at this low. Write this down in your journal. It's very important. Your partials can be taken at this high, or you can hold those trades, hold the trades till whenever. If you want to close your trades here, fine. If you want to take partials here, fine. But it's a swing trade, so you should not be scared of. Swing trade is all about getting the bottom. That's it. Swing trading is all about catching the bottom. If you catch the bottom, you can hold it for as much as even 20 weeks of your workshop. It's not realistic, but it's possible. Nothing is impossible, trust me. But this kind of reality happens once in a while, okay? Not every time. You want to chase something that happens anytime, then make 1 to 2 weeks to reward ratio your average. If you have a setup that gives you 1:3, 1:4, 1:5, fine, take it. But 1:2, don't neglect that. It happens almost every time, right? Okay, so let's look at one more example. How about that? One more example before. I know this video is getting too long, but please, just one more example. Don't quit the video yet. Just one more example before you go, because I like this repetitive example, something that happens, every single time. I would like something that happens every time, so you can learn from it. All right. So we have another fair value gap here. We have price trading into that fair value gap, and what happens at this point? Well, let's see. This is the 1 hour time frame. Price trades into that fair value gap. At this point, you can see that the fair value gap is up above, but price is here. So it doesn't matter if price broke through that fair value gap. It's a point of rejection. Sometimes this might happen because of the algo spooling very heavily. Because here is a point of rejection, but price pushed down more. So what do? Our attention is still on the price action. That's the advanced theory strategy, the swing trading strategy. That's where our attention is. Price drops this last up close candle before sweeping what this low in a new day. Price swept that low. You are not picking this trade if price does not break that high. Remember, price can keep going down because it has already shown violation of this fair value gap. But nothing is certain, right? Everything in the chart is probability. So you just need to trust your gut at this moment. Price breaks that high that same day and retraces. Did everything almost very fast, almost the same day. And you can see that the bodies of that candle are respecting the consequent encroachment of that breaker. That there is your what is your entry. Remember when I talked about price dropping a week very sharp to refill efficiencies? You can see this to refill inefficiency. You can see this is inefficient, this is inefficient. That's imbalance. Price dropping that week to refill that, and boom, start buying. So your entry at the bottom there, your stop loss at the low. Your stop loss is at this low because that zone is an invalidated zone. If price comes for that stop loss there, then that setup is not valid. That's what I mean. Okay, so your stop loss always there. Don't tight your stop loss because you want maximum risk to reward ratio, 50 risk to reward ratio, and all those unrealistic things. All right, so your trade there, and you can take partials there. You can see there's multiple equal high, so very perfect place to exit your trades as a buy side liquidity. Imagine taking trades here, stop loss very small like this, and just imagine this could be up to 6, 7, 12 risk to reward ratio. Price takes that out, or you can still keep on holding that trade. This thing works almost every time. This particular strategy works almost every time, and I'm giving you 4 examples. What you need to do now is write this down. Anything you've learned newly, go to your charts and find them. Study for this weekend. You can use this weekend to study this particular thing. Don't always take my word for it. I'm only showing you the footprints. It's your work to go and draw them yourself, right? So if you find this video insightful, like I say, I keep dropping good content like this almost every week. So if you find this video insightful, hit that subscribe button and like this video. Also comment your assignment. I remember I gave us an assignment earlier, so comment the assignment on this video. And until next time, be safe.